What's up, everyone? This is Anthony Pompliano. Most of you know me as Pomp. You're listening to Off the Chain, simply the best podcast in crypto. Let's kick this thing off. Dan Doney is the CEO of Securrency, a financial markets infrastructure technology company focused on enhancing capital formation and stimulating global liquidity. In this conversation, we discuss Dan's time working as the Chief Innovation Officer of the Defense Intelligence Agency, how innovation works in the CIA and NSA, why a focus on innovation inside large organizations is important, what he is building with Securrency, and why capital formation and global liquidity is important to improve via a blockchain. I really enjoyed this conversation. Guys, bang, bang. I'm here with Dan. We got a whole bunch of stuff to cover. I'm super excited about this because you've got a very different past, I think, than most people who come on the show in the defense world, intelligence world, and then now you're working on tokenization and compliance tools. So a whole gamut of things. But thanks so much for coming and doing this.
Thanks, Pomp. Really looking forward to it.
We're recording this on a nice cold day in New York City, so we're warm now inside.
And I forgot my jacket of all things, so I had to suffer through the streets out there.
It's it's cold, but it could be worse, right? Let's start from the very beginning. Where'd you grow up, and kind of how did you get into the defense and intelligence stuff?
So I'm a farm boy from Western Pennsylvania.
Okay, what part?
Near Pittsburgh, Greensburg.
Okay, I don't know
God's
Greensburg.
country.
When I got deployed to Iraq, I was there with a bunch of guys from Western Pennsylvania, but more like Brookville and all that stuff. So
yeah, Yinzers for the folks at home who are tracking.
We don't even need to go into that.
So I started coding as a 10-year-old. Built cattle auction programs as a teenager. Went off. Didn't really, frankly, know a whole lot about what was going on in the world as I was in a closed-in backwoods tiny town. Turkeytown's actually the name of my hometown.
Turkeytown?
Turkeytown, Pennsylvania. We got
only in Pennsylvania.
Yeah, more cows than people. My older brother went off to the Naval Academy, and I saw him come back from there, a different man. And
positive or negative?
Oh, completely positive. I mean, he left as a boy, came back as a man, and that made an impression on me. So that was the path I chose. Went into the Naval Academy. Was fortunate enough to go to MIT for grad school straight out, and spent several years on a sub, a couple years teaching at the academy, and then got out in 2000, just before 9/11.
Got it. And when you got out, what was the thought process? Like, what did you want to do?
Started having kids, and so it was time to hop out. So I actually went to work for a startup. This was very formative for me. The name of the company was Virtual Logic, and it was built around a concept of a virtual company where you have a shell at the top of just administrative systems, things that you need to function as an employee, but underneath that was a bunch of entrepreneurs. Mm-hmm. And so they were really creating conditions where you would go and eat your own. And so as you came into this, you're really being mentored by entrepreneurs. In the DC area, it was one of the fastest growing companies in DC, purchased by a big company, I won't say who, and they completely obliterated the entrepreneurial spirit, and a number of us
decided to leave.
9/11 hit. I had been doing AI research, starting my grad thesis was AI control of the nuclear reactor at MIT. So I'd been working in AI, was recruited to NSA and worked there for almost a decade in artificial intelligence.
So we got to talk about nuclear reactors, because I had Mark Schneider come on the podcast, who spent 20 years in the Navy and worked in a number of the nuclear energy and kind of power aspects of the Navy. And I was shocked at just how obvious it is that nuclear power is important, right? And kind of I understand there's a bunch of controversy around it to some degree, but what is AI-controlled nuclear power?
Yeah, so obviously safety is a huge thing. Mm-hmm. And so mechanisms to allow you to detect when things are going wrong early. Okay. AI is a really great tool, even in the early 90s, to be able to pick up early signs of problems that are coming.
And this is things like there's problems within the facility, or there's problems external to the facility that may start to inhibit what we're trying to do at the facility. Or
really all of the above, but specifically in this case, detecting anomalies in the reactor, problems with pumps, among other things, early signs of boiling, among other things that shouldn't happen. And so having effective tools to combine all the information to be able to make a decision faster, obviously, is important.
Got it.
The irony, people seen the movie Chernobyl. That's even in the early 90s, the kinds of technologies that were being produced for nuclear energy of self-safe reactors that could not, even if someone was malicious, explode, cause damage, were produced.
Yeah.
You just couldn't get them to market because there was so much fear around the industry. So the irony is the reactors that stayed around were ones that were using older technologies that weren't better.
Yeah.
And obviously the way the Russians built their reactors was not safe.
Yeah. It's just fascinating to me. My favorite part of the conversation with Mark was that they put the rods in a pool and it just sits in the pool for 10 years. I was like, man, this is like a homemade, science experiment that actually works, right? But it was very clear, I think, just the complexity, right, involved in this, and it becomes very obvious that machines are probably going to be better at doing it. I would have thought in the future, but it sounds like even in the 90s, the machines were actually better at it than humans.
Well, so it's one thing to do a research thesis at MIT. It's another thing to have it in a production reactor. But
for sure.
So, yeah.
So, all right. So you go, you join the NSA first, then you spend time at Department of Homeland Security, and then you spend time at the Defense Intelligence Agency. So for those at home, I'm going to use acronyms. So NSA is the National Security Agency, DHS is the Department of Homeland Security, and then DIA is the Department of Intelligence Agency. I feel like I've got my alphabet soup down for the day. What'd you do at the NSA?
I was part of what was originally known as ARDA, the Advanced Research Development Activity there.
Okay.
It later became IARPA as it merged with CIA's research arm. And so I spent that decade in ARDA and then IARPA.
Okay.
My focus was AI. So I was there, the early programs, one called Novel Intelligence for Massive Data. Another one that I worked with was Acquaint, Advanced Question Answering for Intelligence.
Okay.
So those programs were, Acquaint, for example, was about teaching machines to answer questions. And the intent was analytic questions. I worked with the founders of IBM's Watson capabilities. So the capabilities that competed on Jeopardy actually started in that early work. In the early 2000s.
And so you guys are looking at this as we think that this is possible, so let's go find today's technologies and try to build the capabilities to ask a machine a question, have it answer, et cetera? Or are you kind of reverse engineering, or kind of how does that work, right? Because I think the defense organizations and kind of community has done a great job of driving research and development over the years and then commercializing the technology. How does that kind of come together as you're there working on it?
Yeah, so in advanced research activities, you're really looking at the time horizon 10, 20 years out.
Okay.
So, again, at the time, working quantum computing, among other things, and the roots of AI. And specifically, the focus there was on natural language processing and really building the foundation. And why does the intelligence community care? Why does DoD care? It's about decision advantage. So the impacts of failed intelligence decisions are obvious. 9/11 was failed intelligence. So we need decision advantage. We need it on the battlefield. So throughout history, battles are won based on decision advantage. So the question is, how can you get better information than the adversary? How can you make decisions faster and better than the adversary? And that involves processing information faster. In finance, it's known as alpha. And so it's the same basic mechanisms. So our focus first is how can you process a large amount of prose in order to help an analyst get effectively a bionic knowledge worker, allowing a person to reach out further into the information space. And my specific focus was on how do you blend human intuition and machine speed in the space. And we did a lot of work there.
So one of the things that I want to clarify, because I feel really strongly about a part of this work, and then the other part I think is less controversial. There's the front end of like, what data do we have, right? Which is all of the collection and surveillance and all that kind of stuff. And I think I don't want to have that conversation today because I think that part of the conversation, one, is controversial. Two, it's a really, really nuanced conversation that would take hours for us to go through. What I really want to focus on is kind of where you had an expertise and a lot of experience, which is there's data that's provided to you, right? And it's how do we analyze the data that we have, regardless of whether we should have it, not have it. Is it from citizens, militaries, adversaries, whatever? You're really focused on, okay, we have this data. How do we look at this data and analyze it for insights and then also to make decisions from it? But that's a pretty wide open kind of, white space. Like how do you start to look at that and say, this is the areas we want to focus on or start building it?
Yeah, well, look, the fundamental challenge is this. So search engines that people know are really about how does a person find the information that they need? Mm-hmm. Well, in a massive amount of data, it's actually the opposite question that's important. How does the data find the person who needs it? Mm-hmm. So that comes down to valuing information. Obviously, there's a massive amount of information. What do I need to know right now? And the metrics at the very end of my research, one of the things that we discovered that was profound, still profound, is that value of information matters to folks. It's relative. So a piece of information that's relative to me and what I do is different. So there's no universal sense of value. But it came down to 4 fundamental parameters or dimensions. Obviously, relevance matters. Things that are relevant to you, different than me. And if I'm getting a bunch of information not relevant to you, that's not useful. But it's profoundly important to get novel data. That is data that something you didn't know before.
Okay.
Well, here's what was profound about that. Search engines, Google's PageRank algorithm, among others, really drive popularity. Mm-hmm. Popularity and novelty are almost the inverse of each other. So in other words, if you're an expert in a field, getting a feed of what's popular for folks is actually giving you stuff you already know. Mm-hmm. That's not useful. So the very algorithms that drive more towards centrality are not useful in terms of delivering valuable information. You need novelty. And mathematically, it's a much harder problem.
And novelty meaning, so if you take that search algorithm, the things that show up on the first page are the most popular pieces of information. It's the most discovered, kind of the most widely accepted as fact or truth, et cetera. Novelty would be what's the thing on the 472nd page of the Google search results. So it's related. It's just either not very well integrated into that that kind of web of information on the first page, or also hasn't been as discovered or as popular, et cetera. Is that
so
right?
Mathematically, what's hard about it is exactly that. So novelty is what is not known.
Okay.
And so by almost by the essence of it, it's if you were just to use an information theoretic approach and put your finger right in the center of what facts about something, those will be what is well known.
Yep.
So the important and hard problem is how you get to what is new, not close to the center, but related to the center. Mm-hmm. And so there's some hard challenges associated with doing that. By the way, search engines don't do this well.
Yeah. So, well, and actually, they're built to do the opposite, right? Like they don't want to surface the novel information at the forefront of the results because that is unlikely to be what the majority of people are looking for.
That's right. So this opened up an interesting line of research, but then I was off to DHS to do other things of how do you actually get valuable things that you don't know that you need.
So what was the work there?
DHS, I went to work in the Enterprise Service Delivery Office, and I'd been a coder and really an algorithm developer since early on, and since I was a kid. There I learned to develop enterprise systems.
Okay.
And the DHS was made up post 9/11 of 14 different components that came together. That's a train wreck. If you ever had government agencies try to work together, or components, especially when they're brought together, it's hard to work in that setting. And creating systems that could work in a coalition environment where people had different authority, competing interests, is a hard challenge. Mm-hmm. It turns out to be central to the financial system. So I really learned some key skills there. I happened to work on a very important project that led to some of the things that we did later.
Okay. What was that project?
It's called Self-Check. So I was the lead architect on the system. It was a front to E-Verify. So many people know E-Verify. It's a mechanism to determine if one's eligible to work here in the States. It was full of errors. And the government had spent a lot. And what that means on the ground, if it's giving the wrong information, is someone who's actually eligible to work is not able to work. Mm-hmm. That's a problem. Mm-hmm. And so Congress knew it. They spent a lot of money trying to fix it. And the team came up with a novel approach to go after this, which is let people check their own government-held privacy data. Mm-hmm. Now, and make sure it's right. And if there's an error, then allow the person to raise a flag and then the government to go about fixing it. What that requires is if I'm going to check what the government knows about me from a privacy perspective, it better be me who's checking on my data, and you know, I shouldn't be able to see yours and vice versa. So that came down to identity proofing. Mm-hmm. How do you know that someone is who they say they are? And that piece, when we combined that on the back-end engine of E-Verify, we created a system that was very effective.
What were the ways that you could verify?
So first, what do you know? Other biometrics, other components. Now, oftentimes, the very people we were trying to verify were folks who weren't here in the States for long. Mm-hmm. So they were here eligible.
Or something.
Right. Yeah. So you may not have a whole lot of data, but you can look through records, ask mm-hmm. questions. The mechanisms that you detect, you get to a high level of certainty that they are who they say they are, have continued to evolve even since that time.
Got it.
But there's a lot of tools now, and there's a lot of players in the financial services space who have worked on or are working on effective identity proofing models. Mm-hmm. But it's an important problem for the financial services space in general. And the problem that we find fascinating now is not just can we verify you are who you say you are, but how do we verify that you're permitted to perform a function?
Yeah.
And we'll get into that, I think.
Yeah, for sure. And so you spent time at DHS, did a whole bunch of work there. You guys won some awards and things like that. But then you ended up at the DIA. And the DIA is, it's fascinating to me because most people know of the CIA, right, the Central Intelligence Agency. The Defense Intelligence Agency is much less known, but equally as cool in my opinion. So kind of, one, just give us a description of what the DIA is and then kind of some of the work you did there.
Yeah, Hollywood doesn't favor DIA. If you've seen the movie American Sniper, they're actually mentioned in there. We all thought that was cool. But yeah, so the Defense Intelligence Agency has a specific mission of serving the warfighter. So the Central Intelligence Agencies for really national security, but it's important that someone who's out in the field is getting the information they need to. Yeah.
I always thought of it as CIA as more diplomatic and kind of quote unquote spy and all that kind of stuff, whereas the DIA is much more ingrained in the military and those soldiers, airmen, etc.
That's right. So it's a different delivery target. You're actually trying to get your information to folks out at the
different customer.
Good, better way of saying it. That's right. So in performing that mission, I really got my role was Chief Innovation Officer. Mm-hmm. So to be clear, I don't have the cool stories that some folks have of when they're out that you have really out there on the edge. Mine was really how does a government agency, get the best things that emerge into the hands of the people who need it. Mm-hmm. And this is a fascinating challenge. It's actually really critical challenge for banks. Because banks are really struggling with this right now. They know they need to reform. How do they get the best stuff? And oftentimes in government settings, folks think advanced research is the answer. That's where the kind of community that I came from. Mm-hmm. We go figure out a hard problem, we'll go and solve it. It's almost the wrong approach to innovation. So I'm going to break down two problems. I used to joke, if you think R&D and innovation are the same thing, you don't do either one well. R&D is about knowing that there's a hard problem and really breaking down that hard problem really over years, like building a quantum computer and then solving that hard problem. Innovation is you don't know the problem, but there's a lot of cool solutions out there. Great things are happening in Silicon Valley. How do we get to use those? That's very much, there's a great quote from Joey Ito, who's really one of the fathers of innovation. If you want to be innovative, lower the cost of failure. So that's fundamentally it. R&D programs, by their structure, they're long-term, big plan, they're expensive. Internal blockchain R&D efforts at a bank can be quite expensive. The real answer is to, as quickly as possible, try the new things that are emerging outside. Yep. And building the techniques that allow you to quickly sift through those and deliver them into mission settings. That requires an integration framework. So what you'll see about our technology approach is we've made blockchain very easy to integrate into enterprises. Mm-hmm. So banks can get access to the great technologies. Part of, you got some great, cool night vision technology developed somewhere, maybe even overseas. how do you get it in the hands of the warfighter when it has to interact with all of the other systems that they work with? Well, it's important to have quick integration frameworks to make that possible. And these were the kinds of challenges I honed my skills there.
Got it. And so what were some of the things that you guys worked on while at DIA? Because there, we were talking beforehand, some of them I expected and some of them I did not expect.
Yeah, look, so the emergence of quantum computing, as it became practical, advanced cyber attack, defense techniques, just cool technologies across the board, mostly about information processing, and this cool technology called blockchain. This was obviously of interest. And I'll tell you, the interest in 2012 was tracing what was happening in the blockchain space.
So this is crazy because you are not the first to tell me either on the podcast or off kind of after recordings of somebody who worked in the defense, law enforcement, regulation, sectors, that 2012 is actually the year, multiple times that has been mentioned, where government agencies realized this is real, we need to pay attention, and started working on some aspect of Bitcoin, blockchain, etc. For you guys, it sounds like you guys were in 2012 already realizing, hey, there's transactions occurring here. There's this immutable ledger. We don't actually understand who these people are that are transacting. How do we take the identity work and overlay it with transactions and start figuring this out, right? What was the goal, or why did you guys think that was important work to focus on?
Well, I'll tell you. So I'll give you exactly the moment. So I did my first Bitcoin transaction. I was out at the Aspen Institute. It was like, wow, this is amazing, really cool. And then our interest was chain analysis. Mm-hmm. So it's really in figuring out the intent behind a transaction. Why did someone just move this money? And so you look across it, and patterns just stick out immediately as to what they are. And whenever you see this pattern, you see ransomware. When you see that pattern, you see trafficking or laundering, et cetera, sticks out. So there, obviously that matters. And so then the intelligence community doesn't care about who Satoshi is. It doesn't care. It does care about, when the North Koreans are using it to attack our private sector components and then laundering the money out. So they care about that.
And an attack in that situation is they're basically hacking some
the
sort
Sony
of
hack is but others, so they break into people's wallets.
Remind me what happened with the Sony hack.
So let's see what the time frame was. It's probably 2015, 2016. The North Koreans came after Sony. Sony put out a movie that made fun of the North Korean leader. Mm-hmm. And so North Korea
really
came
poking
after
the bear there.
Poked the bear. And basically broke into all of Sony systems and then took their intellectual property, their private emails, splayed it all over the place. And
basically just trying to embarrass Sony.
Embarrass them, and they did. But not only embarrass them, but tactically hurt them. Their movie scripts, all of the things that were coming out suddenly splayed out there on the internet. So they successfully carried out a cyber attack there. Now they do other things as well. There's many folks, I'm sure, probably in the space who are attacked. I've had folks come after me, nation states who do in this space. So, it's a distinct threat. They steal, they launder. But the thing that really made it apparent to me that there was an important need to regulate and this industry was when you saw the nexus between Bitcoin transactions at the time and human trafficking. And so you could see the linkages in terms of how these things were being used to move human beings. And the bottom line, no matter how you come down on this in terms of the community, is governments that have a responsibility to protect their people. This is a thing that societies cannot accept. So the need to intervene, as there's many anonymity, advocates for anonymity, you can't have it. Anytime you have anonymous transactions, you can have private transactions, and we work our tail off for privacy, but anonymity is not, can't stand in a setting like this, because all through human history, when you've allowed for anonymous financial transactions, what follows is untoward. The kind of things that governments have to step in.
So 2 questions. One, caches anonymous transactions for the most part. How does the defense sector kind of go to sleep at night okay with physical cash versus anything that's using a keyboard?
Well, look, so first, lots more bad things happen with the U.S. dollar than with Bitcoin. So, I'm not a purist in this. But, so if I give you $20 right now, people would know because they're watching. But if we did it out on the streets, no one would know that I just did that. So you're right. I can do an anonymous transaction with cash. I can give you $100. I can give you $1 million, and you'll see that leave the bank, and someone's going to say, well, where'd that go as part of this? But what I can't do practically is carry $1 million worth of cash to Iran. Now, it can be done, to be sure, but there are laws against moving more than $10,000, or at least you must report when you move more than $10,000 across borders. It can be seized, so there's significant risks associated with it. It's precisely for this reason. So cash can't move anonymously anywhere in the world efficiently. And
but breaking that down, I think it's important. You can do it. It's just much more difficult because when you got to carry the physical cash too, there's a bunch of checks that are kind of invoked, and it literally involves the physical movement of things, right? Whether that's people, planes, cash, etc. Okay.
You can't do it legally without government oversight, and if you do it illegally, there's risk. I can send $10 million, $100 million of Bitcoin if I had it. I wish I did. To someone in Iran, and within a few minutes they could use it. And so that's the point. Or I could send it to a human trafficker in Thailand. That's the thing where a government has to care about that. They have to care. So this is a big thing with stablecoins, that we are intent on doing regulated stablecoins, and we have the tools to do regulated stablecoins. There's this feeling sort of in the industry, well, it's a managed stablecoin, that should be enough. In other words, it can go wherever it wants to go, and it's only when it crosses into the financial sector that it matters. That's not true. It can't be true. I mean, it is true now, only because it's happening at small scales. But FinCEN's already said, look, at a certain scale, we're stepping in here.
And so how do you think about the trade-off between the privacy and kind of the individual rights versus what I'll describe it from the extreme more as a mental exercise, but like the surveillance state, right? Hey, the government is watching and preventing me from doing things, etc. Versus I have privacy and my individual rights that are kind of inherent in the American democracy.
Yeah. So privacy is a fundamental right. It absolutely is, and it must be respected. It's an important thing that even in the intelligence community, folks are taught. There's an executive order called 12333. The three-letter agencies that we've talked about actually are not permitted to survey U.S. persons without a direct warrant. And this is actually taught, trained, inculcated. It's a serious thing. So privacy matters, even in places where people don't expect that it matters. But it especially matters to us in this business. I'm not affiliated with the U.S. government anymore. It's not my job. But I am intent on doing private transactions. You will see Bitcoin-like transactions go away because they're not private. They're pseudonymous, sure enough. They're not private. The very things that I was telling you about, anyone can look in on the ledger and see what's moving around, means that's not a private transaction. Through zero-knowledge proof, there's a better way. Those transactions can be obfuscated such that only those with the need to know will know. And the next part of that then is, how do you know who has a need to know? We'll go into that tier in a little bit. But then what's really cool about the blockchain, that same immutable ledger that allows you to see, to verify that a transaction took place, also allows you to verify who looked at this data. So if someone's looking at data for an unauthorized reason, it becomes a matter of the record because you can actually protect that data on blockchain itself. So now you have a trace of every time someone has done something, looked at something that they should have or shouldn't have seen, and under what authority they looked at it. That should give a lot of comfort to folks who now currently have their data looked at by who knows whom in ways that they aren't aware of.
Yeah.
So we believe in self-sovereign identity, in a concept which allows you to protect your own privacy data. Now, what's cool about the blockchain generally is you can obfuscate. So you can take and tie behind the scenes a person's privacy data from just a unique identifier. And even there, the unique identifier can be obfuscated. It's important for compliance reasons that that's tied to an attribute. So you spoke about, you had a great interview with Rong Chen, and you pulled out your ID and you say, look, most people could just care, had someone verified that this is me? And they don't, as I show them my driver's license, they're getting a whole lot of information they really don't need. In fact, for most financial transactions, like for example, I'm transacting in a Reg D token, there's only a small number of attributes that you need to know, and those attributes are not privacy indicated. So I'm a U.S. person. That's necessary in this transaction to know that, but there's a lot of U.S. persons. I'm an accredited investor. There's lots of accredited investors. I'm not a principal in the company, in some company, and those things can be known without having to give up the PII.
Yeah. So basically, there's privacy in the aggregation and anonymization of your details, right? Basically, I can describe you without saying who you are, and because that description could be many, many people, it's really hard for me to pinpoint that it's you selling me an asset versus somebody else. The
only thing that a regulator, or frankly anyone engaged in a transaction, really cares about is this a legitimate transaction? And so that's what needs to be known. There's ways you can verify these things, but underneath that is a really important role that we find to be central, and we call this a verification agent. So if somebody KYCs me, does know your customer check on me, how do I know that the person who did that check is in fact legitimate? Because you end up with a race to the bottom problem if anyone can apply that attribute. Well, the financial system has rules for that. It requires you to be a regulated financial institution with a compliance function to be able to verify a person. But there's other attributes that matter for securities transactions. And it's not just accredited investor, which is what most of the security token offerings in the space think that's all you really need to know. You need a lot more than that. But once you know those things and they're verified by an entity who's authorized to do so, you don't need any more. All other compliance functions can happen automatically in a decentralized way. That's radically different than the way the financial system works today. And so once you get that foundation built on identity and then layered on top of that compliance, you can do international commerce in a way that is better than the existing financial system, that completely gives the regulators assurance that only legitimate things are happening at practically no cost. That revolutionizes all of finance, everything we know about finance.
And so I guess as part of this, before we go talk about Securrency, one last question about the DIA, NSA, DHS, et cetera. One of the things that I found fascinating in some of my other conversations is that some of these government organizations were finding ways to acquire Bitcoin for either investigations, research, et cetera. It was pretty bureaucratic, I think, at that time, and people didn't understand, what are we buying? Are we basically just lighting our money on fire or whatever? So there was mining in some of these organizations, et cetera. During your time, were you guys buying Bitcoin? Were you using it to kind of send around and analyze how money moved? Like how were you guys actually doing some of this? And not so much in a academic versus practical way, but just more of when you step in 2012, it's not like today where there's all this information available, right? You can just Google around and you can learn a lot. I think a lot of people were kind of, hey, we got to learn by doing things, right? So kind of what was that like?
Yeah, so look, I can't speak for all of government, all of research, even in a particular agency where a lot of things are going on. What our particular cut on this was just looking at the blockchain itself. So you didn't even have to have Bitcoin to analyze the transactions that were taking place on Bitcoin. But I mean, this may or may not be surprising. There was a lot of seized Bitcoin.
Of course.
Take down Silk Road, that's a lot of Bitcoin. So the government had a lot of Bitcoin, and the government, we'll leave it at that.
I could probably say more than you can. My understanding is that there's certain organizations that when they seize Bitcoin, they turn around, they auction it off. And there's other organizations that when they seize Bitcoin, they hold on to it. And I'm sure that could be used for a whole bunch of different things. All right. So you leave when? You leave DIA what year?
2015.
2015. And kind of how do we go from 2015 to the start of Securrency?
I founded Securrency in 2015, and it was really
wasted no time.
No. So it was really on this concept. So we saw that you layer identity, and then later we found out compliance on top of blockchain. You have the perfect financial institution. But the other observation was there was a lack of stable value in the space. So I couldn't invest my kids' college education in Bitcoin. Wish I had. But, it's just not a reliable investment thesis. And so there needed to be a reliable investment thesis. And so we saw the opportunity. It started with commercial real estate income streams to bundle those streams into dividend-paying currencies. There was no such thing as a security token at the time. The concept had not been developed, but that's what we were looking at, is these new kinds of dividend-paying instruments. We saw that they would have the benefit of a security and a currency, and that's where the name Securrency came from.
Okay.
So we founded under that name in 2015. And then we couldn't deny that they were securities. Of course they were securities. That was the name of our company, was that they were securities. So we had to build out the compliance layer to make it safe to transact in these instruments. So I thought, given how quickly we were able to tokenize things like income streams, I thought it would take us about 6 months to build out the compliance tools. I was off by about 4 years. There was a lot of work to really build the foundation to be able to take securities regulations from Singapore, from the UK, from the UAE. Since a security token can go anywhere, you have to respect all of those laws to make it possible to build a framework that could, that was flexible and where the laws could change, and that was not tied to a specific ledger. That took a while. So we went about building that somewhat quietly, as we sensed that we were onto something that was a lot bigger than what most folks saw in the space. It was also not a topic that no one really cared about then. Man, when we talked to VCs about compliance in the blockchain space, many of them were just getting familiar with blockchain generally, but they certainly didn't see any reason for compliance before 2017. So we stayed very low profile during that time as we built out the tools. So the other early observation that we made is interoperability matters. So we're ledger agnostic, and again, the interview you had with Rong Chen, where he basically said there can't be one ledger, there won't be one ledger. If there's ever one ledger, it means the end of innovation, and so it's right to treat ledgers as something like a database technology as a practical matter. Let's just say your wisdom tree, and you issue your ETF fund on Ethereum. The last thing you'd hate if 10 years from now you're stuck in a ledger which is no longer used because it's outdated, something better's come along, et cetera. So from the very get-go, you want to be ledger agnostic. And so we recognize the importance of that approach and have built tools that actually allows security tokens to move between ledgers. The user can really decide based on the characteristics they want from a ledger where they want it to go.
Got it. And so what have you guys built today, right? Because I think you guys have kind of obviously been at this a long time, built a whole bunch of different things, and you're taking kind of a unique approach to how do you digitize or tokenize assets. Most people are going and finding illiquid assets that currently aren't available in liquid markets. You guys are kind of doing the opposite.
Yeah. So it's a good observation. The centerpiece of all of our system starts with the compliance-aware token framework. It's not a protocol. It's a framework where, as a first principle, you do compliance. That framework, it gets layered into different ledgers. So we can be private permission ledgers, public ledgers. We happen to believe strongly that public ledgers are the right way to go, but we don't really care. You lay the framework in, and the compliance tools follow. And what that means is you have a mechanism by which you can create any token, attach a policy to it, and the token then knows what it's allowed to do and will only allow itself to engage in transactions between known and qualified participants. This can be whether the value is a security, the value is a piece of data. The rules are very flexible. They can be designed, and it's a special purpose language around compliance. The policies are portable. So you build it, you show it to the regulator says, yep, that matches my rules. You test it, and then you use it over and over again as a practical matter. So that was the starting point on this, is you have to have tokens that follow the rules, and it matters not just the rules in the US, but anywhere. On top of that, we've got an interoperability framework. And so what our target always was, institutional investors. So the thinking that you tokenize a piece of real estate or a piece of art, that you're going to suddenly get liquidity, if you don't have a liquid investment thesis, you're not going to have liquidity. So in other words, if I can't know if that piece of real estate is in good standing without looking at it, there needs to be proper disclosures associated with it. And if I'm not in if I'm in a walled garden, the natural access to a whole bunch of investors is not going to be there. So you need to be outside a walled garden. It means the token should be able to go anywhere as long as it follows the rules. And what you want is a liquid investment thesis. Well, what are the most liquid instruments on the planet? Exchange traded funds. So they have strong pricing functions. And so as we interacted with WisdomTree, middle of the year last year, they were seeing their industry radically changing. And so the exchange traded fund displaced and disrupt the mutual fund. They sense that their industry is going to be transformed by what comes next, the blockchain enabled fund. And so they were looking for solutions really to move into this new space, but they couldn't compromise on compliance. Institutional players can't. So when we came together, we saw an opportunity to really solve a big problem in the blockchain space.
Got it. And so walk us through today. You've got WisdomTree is now an investor. You guys have the ability to, what's fascinating to me is you're digitizing or tokenizing already liquid funds. So the ETFs are trading on the New York Stock Exchange, NASDAQ, wherever. You're actually tokenizing those same ETFs. And so now there is a ability to go on a regulated crypto exchange and buy a token, just like you can go on a regulated traditional exchange and buy an ETF share. It's the same asset, right? It's just in two different technology form factors. Why do that, right?
Yeah.
Why create the tokenized format of something that's already liquid in a public market?
Yeah, perfect. So look, the fundamental benefits of blockchain to the traditional ETF space. So just to be clear, some folks are working on creating exchange traded funds of crypto assets. So traditionally traded shares, non-traditional assets.
So the Bitcoin ETF is what you're talking about.
Yep.
The Winklevoss twins, Bitwise, VanEck, all these folks who have filed for, I want an ETF that allows somebody to buy a traditional share on the New York Stock Exchange or NASDAQ that gives them access to Bitcoin.
Yeah,
right?
Exposure to Bitcoin.
Yep.
This is not that. This is the opposite of that. It's a tokenized share of a traditional asset, Treasury, gold, S&P 500 behind the scenes. So what's the advantage to them? Their shares are already liquid. Why do they need tokenization? Two fundamental advantages. First is the cost function. So blockchain allows for automation of the back office functions associated with these assets. Their industry is already under cost pressure as the margins are going down. You can obliterate the cost structures. You can effectively automate all of fund management through smart contracts. So it drives the cost of actually executing a fund to zero. That benefits, of course, investors within the space. Second key benefit in the long run is greater distribution. Actually, in the short run, greater distribution. So they produce a fund. It trades here in the U.S. on, let's say, the New York Stock Exchange. They're getting access to a large pool of U.S. investors at the retail and institutional level. It's a little hard, anyway, to get access to those exposures in Japan and Singapore, et cetera. They'd like to be able to go big in all markets at one time. Greater distribution, which leads to greater size portfolios, so that you could, a investor in the UAE could get easy access and exposure to U.S. treasuries. U.S. investors could get easy exposure to European treasuries or to European stock exchange, et cetera. You want that, and that requires you to have instruments. Traditional financial instruments don't cross borders easily. Tokens that know the rules of all the borders actually can, and that's a new kind of market.
Yeah, and I guess part of this is it's an access play, right? To me, the part that gets misunderstood or isn't widely talked about is there's a lot of people in the world who can't buy an asset on the New York Stock Exchange or on the NASDAQ. And to people here in the United States, they think that's a ridiculous idea. But to the people who don't have access because they don't have a U.S. bank account, they don't have a brokerage account, right? They don't meet certain capital requirements, et cetera, they don't have access. And therefore, that ultimately leads to a huge component of income inequality.
And exploitation. So just as an example of exactly that point. So look, just boiling down, fundamental benefits of blockchain. Consensus immutability is central. The distributed authority is central, and accessibility is central. All of these things are critically important. Like you said, accessibility is really important. Early on in our project, 2016, we worked through MIT connections with a company to do securitized loans in developing world farm settings. These people don't have access to low-cost capital. The kind of exploitation that occurs in settings, they were paying roughly 200% interest on their loans in those settings because they didn't have access to capital in the way that we know it. There's terrible exploitation and terrible stories of what happened to those people before we were able to introduce low-cost capital in those settings. It is a human tragedy, frankly, that there isn't accessibility there. It also is an investor benefit. So let's not kid ourselves. Institutional investors really benefit from having diverse investment opportunities at global scale. So being able to get access to the growth in real estate in Eastern Europe that's a great exposure to get when Western economies slow down, et cetera. They don't currently have practical and liquid access to those things, and so through accessibility you can really change that.
Yeah, and to me, you start out with the already accessible assets to some portion of the population and just expand that population percentage, right? So let's say 70% of the world has access to buying on the New York Stock Exchange. If you can expand that to 100 or 99 or whatever the number is, that's actually much easier than saying, let's go find an asset that only 2% have exposure to and let's bring that to 50%.
Yeah, Pomp, look, so this is a big point right now. So the kinds of assets that are in the security token space are generally limited to accredited investors. It's a very small pool. WisdomTree's offerings are publicly traded, exchange-traded funds. You obliterate that small circle of folks who can actually enter the blockchain space with these new kinds of instruments. They're not so limited. So we can access pools of folks and give them high-quality investment-grade instruments in the blockchain space that folks didn't previously have access to. That's a big story just by itself.
And so give us an example of one of the funds that you guys are doing this with, and we can kind of talk through how that works.
Yeah. That's a piece for you to ask WisdomTree. Look, so they
WisdomTree is going to be quiet right now. Okay.
Yeah. So that's if you listen in on their interviews, they talk. They have a number of marquee funds, right? So among the most liquid gold funds, among the most liquid treasury funds, you can get exposures to foreign currencies, et cetera. These are great starting points. I have. Let me show you this interesting problem. All financial transactions are really movement of value between three dimensions: liquidity, yield or return, and stability. So when I take money out of the bank to get cash, that cash is depreciating. I'm moving from yield to convenience, utility. So that's a fourth dimension that tokenization brings in, which is utility. Within the blockchain space, the volatility is because you don't have a stable asset to allow you to pivot between those dimensions. You haven't been able to form efficient markets here. Within the security space, there is no such thing as utility. I can't take my shares of Apple and use them in transactions. I have to cash them in for dollars and use them. In this new world, you can. So suddenly you're opening up a new dimension for folks to move between. What does that mean? The concept of a traditional savings account where you put your money at rest in a very low yield instrument suddenly goes away when you can put it into a higher yield treasury component or even more, looking at securitization or other yield or return. And then when you want to use it, you can convert it to cash to conduct a payment really instantaneously. So those things really transform the way that securities behave.
Yeah. What is the biggest obstacle for you guys? Is it on the compliance side or is it something else?
It's probably institutional adoption generally. We've been friends with regulators from the beginning. Friends is not the right term. We've been focused on relationships with regulators from the beginning. One thing we haven't talked about is we're overseas we have a fair size office in the UAE, in Abu Dhabi.
Why?
We went there because we cared about liquidity. That's a region characterized by lack of liquidity. They have massive real estate funds, massive energy funds, et cetera, that need liquidity. So we decided that was the market for us to attack, to go into. And we found that it was heaven for us. The sovereigns there recognize that they're very interested in blockchain. They need to pivot their economies from oil-based economies to new type models. the regulators know that the sovereigns want to get into this market in a big way, so they want to do it the right way. So we entered the market with compliance tools and really got moved front of line. So we could work directly with the regulators there. So regulators hasn't been a challenge for us. Working with them, we would go daily with regulators to really work out the kinks. So when we first talked to the SEC, it was pleasant. You know, it's rare that you leave a meeting and the regulator's smiling and you're smiling. It was these were good, constructive meetings. We're actually developing a pilot with regulators to show how you can move value across borders and respect various jurisdictional regulations. It's really institutional adoption. And again, institutions have a lot to lose within this space. We are institution friendly, built for integration with institutions, but they just don't move aggressively into the space. Balance sheet matters in finance is another key problem. How much cash you have in the bank determines how easy you can be sued, and how easy you can be sued determines how safe you are for folks to enter the space. Startups, by their nature, don't have balance sheet. So it's hard to get into these big settings without a big institutional partner, but they're frankly in their own way in many cases. We were fortunate enough to find WisdomTree, and they just had a brilliant vision for the future. And so now we've got the best of both worlds.
For sure. And so as you think through working with WisdomTree, et cetera, after you go through ETFs and kind of do that work, what's the next type of assets that you guys would focus on?
Yeah. So again, for all of these things to work, for things to be convenient, you need stability. And so the ETFs had to be the starting point on this. But as you move out from there, there's really no limit in terms of core functions. When you can automate compliance, a lot of things fall into place. So whether it's just straight payments, remittances, trade finance, again, our core competency is in securitization. So that is taking then and creating funds out of normally illiquid things. Trade finance is a great example of this. Lending generally through blockchain, DeFi is a real movement. You can do self-processing loans, and then you can pool those loans and trade those, driving down the cost of finance generally. Got it.
Before I finish up, I always do rapid fire questions. What do you think the most important company in crypto other than your own is?
Microsoft.
Why?
Yeah,
that's not an answer I was expecting.
I knew I could fool you with one. And actually, let me give a little shout out to Amazon as well, because they're really in the same camp. Because here's the bottom line: in finance, all businesses are now tech businesses in the end. Agreed. And as they boil down to infrastructure plays. We see Microsoft's done great work in the infrastructure. As an example, look what Amazon has done to FedEx and what's happening there. So the banking system, the real threat to them is the Amazon Microsofts of the world, as a practical matter. We've recognized that, and we build a layer on top of their infrastructure services, which actually makes it effectively bank ready. But that's where the play ends. In the end, is those guys own the real stuff. And I'm not just saying that name because I recognize that. Yeah. They're doing real things in this space. Blockchain is just like Oracle was, relational databases were. It is an infrastructure technology.
Absolutely.
And so no one can do it better than those two guys at scale.
I got a great FedEx story for you. Earlier this week, some tax was due on January 15th for lots of Americans. And so I had to go mail mine in. And there's a FedEx store on the corner. And so I walk in, and I had a couple of different envelopes that I had to send. I had one envelope, but I needed two others. And so I said to the guy at FedEx, I said, you have envelopes? He goes, we do. I said, all right, can you help me mail this? And he looks at the first envelope I'd already filled out. He goes, oh, we can't send anything to P.O. boxes. I said, what? And I never thought of, well, it's a post office box, right? And he goes, yeah, we're not allowed to do that. I said, okay, that's fine. I said, well, can I get the envelopes for you, and then I'll go over to the post office across the street? He goes, well, here's the problem is if you get a FedEx envelope, they won't take it at the post office. And I'm sitting there just like, in what world does these siloed systems not work, right? And this is coming from somebody who I don't mail things all the time, right? So I just figured it was like technology, like everything's interoperable. But even the mail system between a private company and kind of the public post office completely siloed and doesn't kind of coexist, which was or they coexist but doesn't interoperate, which was pretty surprising.
Well, how much worse is the financial sector, though, in the bottom line, in terms
way
of
worse.
the fragmentation? Yeah, right.
At least now you can use your ATM card at other people's ATMs, right? Which is like groundbreaking.
Right.
Yeah. All right. So what do you, if you could choose any regulation to change or law, what would you change or improve?
Yeah. So look, the first going in position is the laws are actually pretty good. So there's thinking in the blockchain space that these are antiquated. They're actually there for a reason, and they've stood the test of time. However, the accredited investor rule, as it stands, can be changed. It is very important. It always will be important for securities regulators to protect the public from people who would prey on it. The ICO debacle is really an example of this. However, it shouldn't be based on net wealth only. The reason for the law was in the 1930s, after the crash, people from New York City went and started preying on people's pension funds in the Midwest. They were taking their life savings. What really matters is how much of your life savings you're putting at risk. So if I go and put $2,000 or $4,000 in an investment, it shouldn't really matter. If I'm putting $100,000 in an investment, then it should matter, whether I'm qualified.
It's like a percentage of your net worth type requirement.
Yeah. So look, the UK has laws similar to this. It's really below a certain threshold. You can do whatever you want, as long as you don't exceed that threshold. And the reason why that's so important for the national economy, and Chairman Clayton recognizes this, is more and more things are leaving the public markets into the private markets.
Of course.
And so what that means is the rich are getting richer because they're the only ones who have access to these investment opportunities. So the SEC knows it needs to change. Change will happen, I think.
Yeah, I agree. Most important book you've ever read?
The Bible is.
I'd say it all the time. I'm shocked that's not the more popular answer.
Yeah.
I think a lot of people think it and they're scared to say it.
Yeah. Look, so there's good principles to live by there. What I found is when I follow those rules of do unto others as you would have them do unto you, it leads to peace, and peace with my wife, peace with my kids, peace with the people around me. So.
Yeah, I'm about to get married. I'm learning quickly.
Happy.
Polina's probably listening to this, and she's like, "I'm gonna screw his day up if he fucks around." Aliens, believe them, not believe them, real, not real. Seen one before?
Yeah, seen one before. No, so better not be real. Here's why. I don't know if you've ever seen the. There's a great piece came out in 1998 from MIT called "The Great Filter."
I have not. No.
Definitely check it out. Here's the basic theory, and I think this is pretty much an axiom that if we've not seen direct evidence of extraterrestrial life right now, I think we can all agree that that's true, not repeatable evidence, and we should have based on this. Life propagates. It does so aggressively. We've already seen in a short period of time since the beginning of flight that we've left our solar system. So we're able to move out. And in 1940, a guy, his name is von Neumann, posited something called a von Neumann probe. It's basically this. It's sort of the same thing that bacteria does in terms of the way it goes out. Build a probe that goes and replicates and builds another probe and goes. And you can propagate then effectively at the speed of transmission, which will become something close to the speed of light. The Milky Way is about 13 billion years old. Earth is about 4 billion years old. In 100 years, we've seen this kind of movement. So there is the fact that we've not encountered another civilization. In 1,000 years, we will probably have moved to other planets, and from there be moving on von Neumann almost at the point of life, speed of light, across the
1,000 years, I think that we will be on at least one other planet, if not more than one.
Oh,
I agree with that.
And as soon as you get onto one,
then it's
through this effect, you will go everywhere. And again, we already know how to do it at a speed that's dramatic. So there's an important question that's raised by the Great Filter, is if that's true for sentient life, if you're capable of moving that fast, and we have every reason to believe that you are, one of two things happens. It must be true. One is getting to sentient life must be so hard that there's a filter prior to this, and they posit a number of different points that actually is harder than we think, for it to occur in the process of evolution. Or sentient life destroys itself before it propagates. I think we have some evidence that we can do that to ourselves. And so as a matter of principle, something about sentient life causes it to be self-destructive. And so one of those two things are true. So if in fact there are aliens at some level on this, what that means is what lies ahead for us based on the probabilities is that we're going to destroy ourselves. Read the paper. It's so profoundly important.
MIT, 1998, The Great Filter.
The Great Filter. You can Google it.
I'm going to literally read it later today.
Check it out.
You're touching on a point of whether if aliens exist, do we actually want them to discover us, or do we want to make sure that we discover them, right? And the whole idea is anytime that humans have invaded other human populations, usually turns out much better for the people invading than the people being invaded. And so if you think of that in terms of humans versus aliens, it's unlikely that we want to be discovered, and it is much more likely that we want to do the discovering.
Well, look, so again, life propagates. So at all forms, in every form, it grows into its environment. And so it might be true that that's not always true, but we have everything that we've ever seen shows that that's true. One or the other, in the event that we encounter someone else, is going to propagate.
It's crazy. What question do you have for me to finish up before I go crawl in the corner and feel like I am the smallest thing in the universe?
Dang. So what would you tell a 16-year-old you?
16-year-old
What
me?
lesson would you pass on and say, hey, don't do this?
It wouldn't be not to do things. It would be a couple. I'm going to cheat. It's not going to be just one thing. I think that over time, I've learned certain things that at 16 would be much more valuable. The first being like swing for bigger opportunities. Right. I've told the story before, but when I moved to Silicon Valley in 2014, went and met with the only guy that I knew that lived out there. This guy, Ben Smith, was running a company called Wonderful Media, and I asked him, what's the best advice you have for me? He said, there's two things. One, keep your personal burn rate as low as possible, because it'll allow you to take on opportunities that if you have a high burn, personal expense rate, you just can't do, right? So you got to go take a job that doesn't pay a lot, but could be a big opportunity. Second is you'll be much more rewarded for taking big opportunities and failing than you will be for having small success. And I think that, another data point on that, Steve Schwartzman in his recent book, Whatever It Takes, he talks about it's just as hard to do the big thing as it is the small thing. So you might as well go do the big thing. So I think that's kind of a reoccurring theme. The second is I, over time, realized, but did not when I was 16 years old, like you become the 5 people you hang out with. And so I,
pick wisely.
have had very, very great friends along the way. But I think that as you start to understand, you can have friends, and then you can have people that are those 5 people you spend the most time with. You kind of just level up a little bit. I think that's helpful. And then the third thing is this weird thing that I think you can't tell a 16-year-old because a 16-year-old won't believe it. But it's just do you. Like, just be happy. Who the fuck cares what anybody else says or does?
No doubt.
And I forget the quote and who says it, but it's something like, you spend your 20s like thinking everyone is talking about you. You spend your 30s, 40s, 50s, whatever it is. And then it's like, and then you spend your 60s realizing no one's ever paying attention. Right?
Yep.
Like whatever that quote is, it just always sticks in my head as just like, no, literally nobody fucking cares. And the people who think that they care are actually probably just jealous.
This was actually a trick question because I got teenagers, Pomp. So
great.
You took my job. Good job as a father.
What do you tell them?
Make their bed, get to bed on time, don't play video games. So not nearly as useful.
Okay, so we only got a minute or two here, but one of the questions I have for you is how do you handle them now saying, but I could be a multimillionaire professional athlete playing video games? Because that would be the first thing I would say, right? My father told me the same thing. Stop playing the fucking video games. Go outside, read, do all the things that a parent would say. There was nobody that we could point to be like, well, that guy's a multi-million dollar professional esports player. But now there's a number of them.
Yeah. So it's the danger because every one of them thinks they can be.
Of course.
And it's the same thing as why can't they be a multi-million dollar quarterback in the NFL? Because there are only a couple people who can do that.
Yep.
So, that's the bottom line on it. And other than that, it's a lark. You got to recognize that competes with your ability to be productive in other areas. And it's everything's work-life balance in all of this. But if you can't keep it at work-life balance, and because you have this dream, it's dangerous.
Yeah. The one thing you said, make your bed. The other thing that I think a lot about is every person that has attained some level of quote-unquote success that I've talked with, and I asked them what was the secret, majority of them will say some version of persistence, like showing up every day, etc. And the whole making your bed is a perfect example of just like there's things that you got to do every day, right? And if you can learn that habit, it's pretty powerful.
And I learned this way too late. Discipline in every aspect of what you do, that daily commitment to doing the right thing is this. You will never go far if you do that from success. Of course. You'll always be moving on the path.
I think it is, we'll end on this, but I think it's Jocko Willink who says discipline equals freedom, right? People think that the discipline is a bad thing, but actually they realize once you have the discipline, you're able to accomplish things. When you accomplish things, it equals freedom. So transitive property, which I tend to use as an excuse all the time. All right, listen, thank you so much for doing this. I really appreciate it, and we'll have to do it again.
Thanks, Pomp.